What's up, folks? I just want to go over a recent trade I made with Apple. You can see that this is a pattern finder. It shows uses AI to draw lines and different trend lines on the chart here. So we got Apple. I placed a calendar spread. I sold the 140 and bought the 140 put. All right, so we sold the 140 put that expires on December 16th, and then we bought behind that the 140 put. So basically, this is a calendar spread, and the max profit we can make is if we pin the 140 put on expiration, on the day of expiration. So let's go back to Pattern Finder. So since I put this trade on about 2 days ago, we were right around almost 148, I think. And since then, we've made a little bit of a down move. So we're profitable. We're up about 20% on this trade. And basically, the reason I made this trade is this overhead resistance that we were sort of butting up against. And then, we have some below resistance, support, and it looked like we're heading down that way. It only a little more percentage more, and will be at the 140 mark. If it goes below 140 too much, I begin to lose money. But right now, I am up 20+%.
Besides the overhead resistance from this band that was drawn algorithmically by the AI software, if we go down to a scatter plot of the pivot points, we are under the 10-day exponential moving average, the 20-day exponential moving average, the 50-day, and the 200-day simple moving average. So we got a lot of overhead resistance as well. If you are buying a calendar spread, if we possibly could move up to these levels, and then on expiration we would be not profitable. But a play to keep in mind after I probably close this out in the next day or two is if we do get a move to the upside, maybe sell a call credit spread, because volatility is still sort of high in this name. When I first put on this play, though, it was lower, and that was part of the reason why I had chose a calendar spread versus a call credit spread.
And another reason why I did this trade, let's just show you SPY. I showed this in another video. The SPY is coming up against major overhead resistance in all different time frames.
And I bring up the fact that the SPY is up against major overhead resistance because Apple and SPY are super correlated. Let's go check out the correlation coefficient between the two. So Apple, look at this, is the SPY correlation in the last 3 months has a 0.86 correlation. So the reason I bring that up is because if we go back to Pattern Finder, so the SPY is falling, and Apple is one of the major constituents of the SPY, and it's very correlated. So if the SPY is going to go down, Apple should also go down partially.
And at the time, I think Apple the IVR was a little bit lower. It's increased. So by being long, I benefit from the expanding volatility in the back dated options. So the December 30th option, which are longer dated options, are more sensitive to swings in volatility or vega. So you have to keep that in mind when you're trading these calendar spreads. So overall, good trade so far. Just played that right, and 20% gain on a calendar spread is, I think, that's a pretty good game.